This is not financial advice, not legal advice, for entertainment, educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff so you get the videos I put them out. So you know, I'm thinking, see, I'm analyzing that data. Like I tell every day, the data they release us is false. I mean, it gives false narrative to markets so we can make bad trading decisions. Listen, the banks are in trouble. The banks are having liquidity issues. They don't have any cash on hand. And you can tell by the reverse repos that there's no cash on hand. But here's more telling evidence that the banks are in trouble. The banks are recalling credit cards from people with excellent credit, from people who never had a late payment in their life. And the banks are shutting down their credit cards because they don't have the money if the people make charges. Okay? The banks don't have the money. I know somebody personally, who has excellent credit, never had any late payments, and the bank decided that they wanted to pull back the credit card. Now, why would the bank be pulling back credit cards when they're getting 15, 20% interest rate on the credit cards? You know why? Because they don't have any cash. The banks are having liquidity issues. And I'm not telling you to buy, hold, or sell any bank stock. What I'm telling you is this. The big banks and the big credit card issuers are in trouble. Don't be surprised if a month or two from now you run your credit card and it's not working. Okay? Now, I've been saying this for a while, and this is not legal advice. This is not financial advice. But real gold and real silver might be a better investment than leaving your money sitting inside of a bank. Because I think too much money in a bank right now is a big risk. And here's the other thing. The FDIC, they don't have enough money on hand if if a majority of the banks collapse, they couldn't cover all the money. They could not cover that FDIC insurance. There's not enough money to cover all the money for all the depositors. So it'll end up becoming first come, first serve. And you know how that paperwork goes. And not to be racist, but poor people, middle class, upper middle class, you're going to be at the end of the line. They are going to service the rich depositors first. They're going to get their money out first. The people that have an inside of the bank going to get their money out first. And that's just the way it is. That's just the way it is. The people at the lower end of the spectrum are the ones that's going to get burnt. Okay? They're the ones that's going to get burned. The bottom line is this. Be very, very careful with the banks. They are running out of money. But the good part is this. If they're running out of money for credit cards, you think they have money to loan to these entities that are naked shorting AMC? They don't. And once their liquidity runs out, AMC, GME, and all those other mem stocks that they've been naked shorting should go to the moon. Anyway, please leave some comments. Tell me what you think. If the banks don't have money for credit cards, do you think the banks have money to fund naked shorting AMC? Anyway, have a great day. God bless. And I appreciate y'all on this journey with me.